All right, so let's start off with this. Futures higher going into the Jay Powell speech later today, coming up at 10 a.m. Eastern time. But the S&P coming off a 5-day losing streak, and the Nasdaq having its worst week since all the way back in April when we had the tariff announcements. What do you make of this, I guess, rebound, if you will, in the pre-market right now?
Well, it's a little bit of hope at this stage. So, the market has really had a lot of euphoria around almost a certainty for a cut come February. We've had a little bit of a wobble around that. So we had a Fed president from Cleveland out yesterday talking about a laser focus, if you will, on inflation. We had PMIs yesterday showing a bit of a resilient economy. Expectations now for September have actually dropped to around 70 or so percent. So maybe we're getting a little bit of a bounce back as we sit back, drink our coffee, and just wait for 10 o'clock to hear what Chair Powell has to say.
All right, so as you mentioned, we're waiting for 10 o'clock. We're going to be talking about that all morning long up until 10 o'clock. I'm going to get you your word of the day. It's elucidate. Great word, by the way. It means to make clear and explain. So what do you think Jay Powell is going to make clear or explain? Because he does, as our Steve Leisman has pointed out, he has a pretty easy out to say we're data dependent and that there's an inflation report and a jobs report coming up before that September meeting. So what do you think he's going to make clear?
I think he's going to, at the very least, Frank, open the door. So, what are we looking at, and what have we seen over the last few data releases? A few things. First, it's been somewhat surprising, even though inflation has firmed. We really haven't seen a big increase in prices that you would have expected from even the initial tariff deals that have been put in place. But most importantly, of course, is the jobs report, the massive revisions that we have seen. And that is, again, on top of, remember, the big yearly revision from earlier this year of nearly 1 million jobs. So weakness in the jobs market is really what I think the investor community is going to be really listening for today, really expecting Chair Powell to elucidate on, are we going to be leaning into jobs and maybe giving the CPI and giving inflation a little bit room to move, because this is tariff related, it is one time, it is quote unquote transitory, and quite frankly, we haven't seen much of it yet.
Transitory, I haven't heard that word in a while. Jim, I want to talk to you about some research that came out from our friends from the Carson Group. Ryan Dietrich, he put this out. So it's been about 9 months since the Fed last cut. So he kind of looks at what happens if the Fed does cut coming up in September. And the data shows if the Fed cuts in September, historically, after the first month, after 5 to 12 months for a cut, again, we're at 9 months right now, the market's down 1% that following month, but up over 12, almost 13% the following year. So let's just play the other side of the coin. Let's say we get a dovish Jay Powell. We're going to lead into these cuts. Where would you put money to work right now if you think we're going to get a cut?
We do think that we're going to get a cut. I mean, a little bit of an echo of Carson's research. What's most important is what comes after the cut. It's not really as important to us if we start in September. The question really is the market has 2 cuts priced in for 2025. Do we get 2, or do we actually surprise to the upside and get 3 more cuts? But so, at this stage, we expect them to take September. We expect them to go 25 basis points, mostly based on the labor market. Our suggestions here is that normally that should be a bit of a boost to risk assets. We're suggesting to our investors to take a look at their risk portfolios, make sure you're diversified.
Okay.
That's make sure you're diversified globally, make sure you're diversified by sector, make sure you're even diversified by factor. A lot of momentum driving the market nowadays. How about a little bit of value? We think that makes sense at this stage.
Speaking of, Jim, we want to get to your pick very quickly. Your pick's essentially gold. I'm looking at gold. It's down about 2% over the last month. Why would right now be a good time to buy gold ahead of the Jay Powell speech?
Well, once the Fed is easing, we see interest rates, at least on the short end of the curve, probably drifting down a little bit more, even though we're going to get a bit of a steepening like we have been. We expect that to continue. And that's really a reflection of the debt situation going on here in the U.S. and really around the developed world. So it's really a reflection of our view that the dollar should continue to weaken, that the debt situation isn't going to be getting under control anytime soon. And we do expect the Fed to begin this kind of second phase of the easing cycle at a time when the economy is, GDP now running at about 2%. So we like gold as a little bit of a hedge to the U.S. dollar, and also including the supply demand dynamics of gold itself.